Hi there, traders. This is Brad Gilbert. Now, I just want to give you a bit of a quick preview of the Fed decision today. Now, with the main decision, obviously there's no change in rates expected just at the moment, but what we are looking for is the continuation of their sort of forward guidance that they are. There's an 80% chance they're going to raise in September, and also potentially another one before the end of the year. And if he sticks to that, well, the dollar should rally. Now, what you want to do is you can come back into the Fed's website, come into monetary policy, and actually read the transcript as it's being released. Okay, it's released globally at the same time, so you can have a look at this. Now, just be aware there are no speeches following this, so it's a clean trading opportunity. I think after the first, 1 or 2 minutes, we'll have a lot of volatility out of the market, and that's probably the best time to trade. Getting in straight away on the announcement, you might think you're getting in early and it's all great, but what you usually find is the first move is not necessarily always incorrect, but it usually bounces one way, 50 points, back the other way, 60 or 70, and then it goes on its way. So we're not expecting a lot out of the Fed, but I'm expecting still they're sticking to the guidance, at least potentially two hikes this year, and that should see dollar-yen rally. It should also see a bit of downward pressure on Aussie, Kiwi, I think across the board, Euro and Sterling. Now, we've got actually, leading into this, we've got a really nice setups. Okay, what I mean by that is we've got trend lines. Now, I don't think these trend lines are going to hold up until the Fed, but they will give us opportunities. Now, dollar-yen, it's in the middle of nowhere, so that's a little bit tricky to get in. Downside, I think I like Euro down there around 116.40 and also around 130.95 on Sterling. Now, dollar CAD, I'm leaving dollar CAD out. I don't like it. The NAFTA, the data's different, the oil's impacting. I'm just going to leave dollar CAD out. I think dollar yen is a very good opportunity, but you're going to have to be a little bit brave there and just jump in at market. Okay, on the release or on some sort of retracement. The key thing for dollar yen is going to be where the currency is right before the announcement. That's the key level, right? So if it shoots up and you miss that first opportunity, the retracement is back to that key level and then it goes, okay? That's your retracement level. But these other currencies like the Aussie, these ones over here, the Aussie, Kiwi, Euro and Sterling. Now, if they are below the trend lines, Aussie and Kiwi, I'm going to be looking, so what I'm expecting is that they'll dribble down, looking for a retracement to get in, okay? I'm using the trend lines. Now, if it's in the middle of nowhere, it's a high-risk trade, but we will have clear direction from the Fed. But as I said, don't wait. Don't jump in and get all carried away straight away with all your cash. If there are no trend lines and no good entry levels to get in, you can still trade, but I would decrease your trade size. Okay, that's the one way you can get into these trades. What you're doing is, because the trade entry is not as gorgeous, it's a good way to get into the trade with get something in it without too much risk on board. Now, just having a look at one thing you want to keep an eye on as we go through this is the dollar index. Now, coming into Europe, it has actually sort of broken high here. I'd say a lot of European guys will be adjusting this trend line, but I just want to show you where it is. So the dollar itself has broken a little bit high here. Okay, you can see it just coming back down to test the trend line, and it's bounced off the trend line already. Now, as we come into that North American session, I would suspect that a lot of traders, the banks, will actually redraw the high there. So just be aware, as you come into the North American session, you're probably redrawing the top, just to give you that clear level. And that's where, so you're probably looking at not above 94.70 really to get into the into a long situation there on the dollar index. Now, once again, the initial first reaction, right, they could just jump in mad. So once it gets up around here, I can't imagine Jerome Powell is going to be more aggressive than he needs to be. He just needs to come out and say, we're on track. September and probably December. Okay, there are two things, and that's pretty much that's the expected. So he's not going to come out and say we're going to raise 4 times. That would be insane. But what you can get on the initial spike, right? This goes for all the other major pairs as well. You get say a 20, 30 point spike higher. Once it's up here, everyone just sits back and waits. They know not to buy here. So then you get a quick reaction lower, and then it goes. So this is, to me, always on these events, the best opportunity to get in is on the retracement. Okay, wait for the initial spike to finish. Wait, keep an eye on the key level before the release, and then get in, and then watch it rally from there. Now, once again, coming into the actual event itself, there's no. You can always, actually, this is one thing you probably should do as well. Always expect the unexpected. I mean, there's an 80% chance they'll raise rates in September, the Fed. So with that, I mean, there's got to be a slight chance that they do raise in this month. Now, none of the forecasts, okay, if I just get my pen back on here, none of the forecasts are expecting anything. They all expect the same, that just nothing. No change in rates. Look to September. The plan is set in stone, and we keep moving forward. So just be aware. I've just got a feeling that there could be a possibility. I mean, the data hasn't been that overwhelmingly strong, but if they did want to send a strong signal, they could raise rates in this meeting, and you'll see the dollar go through the roof. All right. So and that's the picture. So just to finish up, I mean, I only wanted this to be short and sweet, just to give you a bit of a heads up. Now, coming back to the other major pairs. Right now, bear in mind we did see Bank of Japan. Okay, now the BOJ, it's really no change from their policy for the last 30 years, but rates on hold for a long time. So if the Fed do maintain a strong stance, hawkish tone, then it would make common sense that dollar yen goes up. Okay, US up, yen down. ECB are pretty much on hold forever. So that strong stance by the Fed would see euro go down. Don't forget, we've got Brexit here with sterling, so it is a little bit trickier than some of the others. But the Aussie and Kiwi are in limbo. And whatever happens to the US dollar will happen to these two pairs. I think you've got to have them on your trade list as well. All right. And that's pretty much it, guys. So we're just going to sit tight, wait for the Fed. I don't think the ISM manufacturing data will come into play too much before the numbers. I'm expecting something pretty normal from Powell. I don't think there's a lot of danger that he brings awareness to trade issues. He's already said before that he sees no trade concerns with the US. If anything, the economy is going very well. He will stick to that plan. We should see a small bit of euphoric US dollar buying. It comes back, and then that's when the real buying happens. That's what I'm expecting. All right, guys, good luck. I'll see you in the trade zone, and just maintain control of your capital. This is where it can get a bit loose, and sometimes the best trading opportunities are after the Fed. An hour or two afterwards, the picture can become extremely clearer. So don't get all excited about trading in the first 5 or 10 seconds. That's just hazardous. All right, guys, we'll catch you later on. Cheerio.